Hi everyone, my name is Harshal, and today I'm going to explain you about the basic concepts of demand and supply. So now here, if you see, I'm on this website tradingview.com, and this is a daily chart of Nifty. Okay, there's a note which I have added over here. If you see demand zone, supply zone, blue candle, and risk reward. Okay, so this is a setup which we need to look for. Okay, now let's say first, let's talk something about demand zone. If you see right here, the current market price is 9039. Now, if I say green, blue, green, green, so this is the candle which I'm looking for. If you see, there are total three types of candle. One is red, green, and the other is blue. Okay. Blue candle is also called as boring candle. And if you go into the indicator list, you can just type in boring candle, you will get the candle. Just select that indicator, and it will turn the color from you know red, green to blue. So you will see three candles. One is green, blue, and red. Okay. So whenever I'm talking about demand or supply, I need minimum one blue candle in between green, green. Okay, I'll explain you that later. First, just keep this point in mind that we should be having one minimum one blue candle, and maximum it should be four. It should not go beyond four. Okay, and whatever is the setup, even if it is 1 minute chart, 5 minute chart, daily chart, weekly chart, monthly chart, the risk reward which I'm looking for should be minimum 1:3. In case if I'm risking 1 rupee, I should be expecting minimum 3 rupee as a profit. Okay, so now I'll go to the chart, but then to help you all understand in a quicker way, I have taken some screenshots of Nifty itself, which I have traded in this week, and I'll explain you how we are supposed to spot. So let me first again go to this screen. Okay, now when I say demand zone, we have two setup. One is green, blue, green, green, and the other is red, blue, green, green. So now, if you need to spot the demand, you need to go from right to left. You need to go from right to left. So if I say right, so the first candle which I'm looking for is green, then again green, then blue, and then green. Or it should be green, green, blue, green. Sorry, green, green, blue, red. Okay, now let me show you in this chart. Now let's say current market price is 9039. So this candle is blue, this is blue, then this is green. After green there is a blue candle. So ideally I'm looking for green, and then again I'm looking for green. So now I need to first spot two green candles, then only I will check for blue candle. Okay, now here if you see, there is only one green here, and then I have two green candles over here, one and two. Let me let me zoom this for you. And okay, now if you see, I'm looking for two green candle minimum. So one is one green, this second green. Now if you see, the criteria is met that I have at least minimum two green candle. The third one is I'm looking for is blue candle. Now for blue candle, I have made a note over here that it should be minimum one and maximum four. Okay, it should be minimum one and maximum four, and then we should have either green or we should have either red candle. Now if you see, I say minimum 1 to 4, then I have two green candle. After that I have 1, 2, 3, 4. So this four candle, 1, 2, 3, 4, these are blue in color. Okay, and then I have green candle. So now if you see, this criteria is met: green, green, blue, green. Means green, four times blue, and then two greens. Means this is my demand zone. Now, this is a failed case, but again, I am explaining you this because not every time you are going to be rewarded. Because whenever you are eyeing for a target, there is always a risk involved. Now, if you see, this was the demand zone. There was this candle, there was this candle, and then it went back into the zone. So ideally, whenever it is coming back to the demand zone, we are supposed to go long. So now here, if you see, ideally, as per the rules, this is the demand zone, right? But if you see, there's almost a point of like 250 points of risk. So ideally, I avoid this trade. I ideally avoid such kind of trade. The reason is I always look for potential low and potential high. So now if I look at this area, if I look at this area, then this is almost on the high of the curve, I would say, right? If this scenario would have been somewhere around here at the bottom, let's say if this was the high and low was somewhere around here, then I would have at least thought of going long, because there was a very huge risk. It was almost kind of 250 points, and again it was almost on the high. Again again there was a rising wedge pattern which was formed. So ideally you are not supposed to go long in such kind of trade. Whenever you see any demand, this was an exhaustion candle, there was a huge gap. And if you see, if I, let's say, draw a rising wedge over here, then this was the way I would have drawn. I'm not drawing it very perfectly, but then yeah, this is the way. And then if you see, there was a gap up, huge gap up, and then again it broke, and then it went to sideways. Now I'm not talking about rising wedge. The only thing which we are supposed to focus on this chart is, we are supposed to plot daily demand zone. So now if you see green 4 times blue, green, green, so this was an invalid trade because the stop loss was hit. Okay, so again, whenever you are going long or short, you are always supposed to keep your stop loss also, right? So the main criteria is green, blue, green, green, or it should be red, blue, green, green. So now in this case, even if this candle would have been red, that would have been a valid trade. But then ideally, red candle will always be on up. Whenever it is a red candle, it will be always on the up. If I'm talking about a demand zone, it will be red, blue, green. I'll directly show you the example which I have taken the screenshot. So now here if you see, okay, again I told you that we should have minimum one blue candle and maximum we should have four blue candle. So now here if you see, this is a nifty chart. And okay, here if I see, let's say this was my current market price. Let's say this was my current market price or somewhere around here. So I need to go from right to left. So if I go from right to left, I'm looking for red, blue, green, green. So in this case, I have one red candle, two blue candle, and then I have three green candle. So for my criteria, it should be minimum two green candle. Here, there's one another green candle. So whenever you have more than two, it is very good. But then at least the minimum criteria we should have is we should have minimum two green candle. So now this setup was something like red, blue, green, green. Ideally in technical analysis we call it as drop, base, rally, rally, right? So for red, we will use term as drop, base, rally, rally. Now, if you ask me what is blue, so blue is something I would say as a fight in between bulls and bears, right? Just imagine that there was a red candle. It means obviously bears are in control. Okay. Now, whenever you see a blue candle, it means bulls are trying hard to fight with bears. And whenever if you see a boring candle or a blue candle, it says that now it is a indecision in between bulls and bears. Again, I have blue candle, which is again an indecision, and then I have a green candle. It means here in this battle, bulls were in control, right? The next green candle, and then again the next green candle. Now, if you ask me, I need to go long. You're not supposed to go long somewhere in this candle, because this was a, ideally we call it as a leg out candle. The more big leg out candle is, the more it makes a strong demand zone. So now here we have red, blue, green, green. So I have drawn this line, which is one horizontal line, this blue colored line, and then the bottom line is a stop loss. So in this area, whenever your stock is coming, your indices, your nifty, your bank nifty, whatever it is coming in this demand zone, you're supposed to go long, right? So if you see, prices went up and then it came into the zone, it touched it touched this line, okay, you're also supposed to take a entry just above this line. Do not put exact entry at this, because there are so many buyers at this level and there are high chances of missing out the trade. So to ensure that you are not missing out any entry, you're supposed to take a trade above this line. Now there are three types of trader. One is aggressive, second is conservative, and the third is confirmation entry. So now aggressive means if you see this candle, if you have a bit of knowledge about candlesticks, so this candle, the up the top of this candle is called as wick. This is a small body and this is a lower wick. So whenever I'm touching this line at the wick, I will call it as aggressive trader. If I take this line at the body, it will be called as conservative trader, right? So now if your let's say nifty or any stock is in huge demand, and whenever you get a retracement, it there are very high chances that it will give entry only to aggressive trader. It won't give entry to conservative if you are in a very strong, I would say, trend, right? So now here if you see, it came into this zone, it just touched and then it went off. So this was one example. So the example was red, blue, green, green. So now here if you see again on this chart, I have clearly stated in demand zone we should have two combination. One is green, blue, green, green, or it should be red, blue, green, green. So now again if I see, this was red, blue, green, green, and in blue I have written two because here we have two blue candle, and minimum it should be one, two, maximum four. So in this two, it means it was very much valid, right? So this was a demand zone. Now let me go on to the next screen. Now this screen is, I guess, Thursday or Friday. This was the chart, and okay, green, one blue candle, and then again two green. Green, blue, green, green. I have mentioned green, blue, green, green, and one blue. That's why I mentioned one. Prices went up, it came back, it touched the demand zone. It touched the demand zone. And again, I said, whenever you are in a strong trend and whenever you have a very strong leg out candle, this is a leg out candle. Whenever you have a very strong candle like this, there are high chances that it will give entry only to the aggressive trader, not to the trader which are expecting that the prices will come down till the body level, right? So here this was the example of green, blue, green, green. So I've showed you two example of demand. One was green, blue, green, green, and the other was red, blue, green, green. Now we will talk about supply zone. Again, it's the same concept, only we are supposed to shift. When it was green, now it should be red. When it was green, now it should be red, like that. So it should be red, blue, red, red, or green, blue, red, red. So I'll show you directly with an example. Okay, this was a 1 minute chart of Nifty. I've traded it on intraday basis. This was a 1 minute chart of Nifty. So now, if you see, as per the rule, okay, as per the rule here, I have clearly mentioned green, blue, red, red. So if you see, this was one green candle, then this was blue candle, and this was red, red. Again, I said that whenever we have a very good leg out candle, it makes a very strong demand or supply. So here if you see, there was the entry which was given to a conservative trader also. So again, if I would have taken it from wick, it would have been for aggressive trader, and this was from body, so it was for conservative trader also. Now if you see in the right side, the risk was only of 2 rupee. The risk was only of 2 rupee, and it was a 1 minute chart. I will show you live also on the chart, but then this is the example: green, blue, red, red. Prices went till 8990 from 9000, almost 10 points. It went back, it went to this zone which was supply zone, and then if you see, literally from 9000 it made a low of almost 8920 on an intraday basis. Okay, we are not going to expect 100 points of fall with this. The main thing we are supposed to follow is 1:3. Then it is completely up to you. If you want to trail your stop loss, you can, but then you should be minimum looking for 1:3, right? So this was 1 minute chart, and the example was green, blue, red, red. Now let me move on to the next example. This was again 1 minute chart, and if you see, this example is of red, blue, red, red. The other example was green, blue, red, red, and now it is red, blue, red, red, blue one. Whenever we have one blue candle, it makes a very strong demand or supply. So here, if you see red, blue, and then red, red, it was a very good leg out candle. It was a very good leg out candle. It was a very big candle, and then the price went down till 8950. It went back in this zone. This was the stop loss somewhere around 9050. It came into this zone. It fell again. It again came into the zone, and then from there it made a low of 8920. Again same, but then the time frame was different. And again, this works on any time frame. Okay, this works on any time frame. It works on daily, weekly, monthly, even on 1 minute chart. Now, if I was saying, let's say I'll take 5 minute chart of Nifty now. Right now, price is, let's say, 9051. Again, now as per the rules, I need to go from right to left. Okay. Now, if the prices are below, I'm going to check for demand. If the prices are above, I'm going to check for supply. Right. So now from here till here, I'm going to check for demand or supply, whatever it is. Okay. For supply, I should have minimum two red candle. Now, if you see, if I go from here, if you see, I have two red candle. One is this red candle and the other is this. But I should have one blue candle in between green and red. There was no blue, there was no red. There was no blue candle in between green and red. It was directly red after green, right? So it is a kind of, we call it as profit booking. It was not a proper supply zone. It was only a profit booking, right? So now if you see, if I travel from right to left, if I travel from right to left, I have one demand zone over here. If you see, I have one demand zone which is green, blue, and then green. Now if you see, I won't call it as a very aggressive or a kind of quality demand, because the first candle is very small. The first candle is very small and the second candle is very big. Ideally first candle should be very big. Then even if you have a very small candle, the second candle, even if you have it very small, that's okay, but then first candle should be very big. Second, we have not officially got entry. So ideally, I will avoid this trade because it is not a quality. Even though it is a demand zone, it is not quality demand zone. Okay. Now again, I need to check for two green candle. Two green candles should be somewhere around. Okay. So if you see, okay, if you see, I have three green candle. One, two, three, and then I have blue candle, and then I have red candle. Right. So it fits my criteria: red, blue, green, or green, blue, green. So this is red, blue, green, and three green. So whenever you have any extra candle, it is it's a kind of advantage for you that you are getting three green candle. It makes a very quality demand zone. I'll I will take a point somewhere around here, and this is the one. So now for me, this is red, blue, green. Okay, and the other is, even if I would have taken an entry as this, then it would have given me entry for aggressive trader as well as conservative trader, right? So if you see, I have marked two zone, and then it came into the zone. It came into the zone here. Prices came into the zone, and then it went back. Okay. So if you see, it came into the zone and then it went back. Just a moment, guys. Okay. So it's red, blue, green. It came into the zone. So I'll take aggressive entry from here. Let me delete this. Now, the entry was for aggressive as well as for conservative. So if you see, prices came into this zone, and then it went almost till 9060. So if you see, it was like 8982 was the level, and 8971 was the stop loss. So it was almost kind of 11 points of risk, and the reward was almost, you can calculate, 70-80 points of risk. But then again, we are looking only for 1:3. Then it is completely up to you if you are going to trail your stop loss. Okay. So that was the example on 5 minute chart. Mm, Again, there might be cases always that you might get hit with the stop loss also. So never assume never assume that it is going to work always. Okay, never assume. So now here also, if you see, here also if you see, if I draw this line, let me click on boring candle. Now if you see, I have, now if you see, I have uh, one green, three blue, and then again one green. Okay, even this is a demand which is red, blue, green, green. But right now let's see, green, blue, green, green, and I have marked this line, two lines. Now if you see again, it came in the zone, it touched, almost 8969. The stop loss was 8953. From 8969 it went till 9045. And again guys, this is intraday, so we are only looking for 1:3. That was the example. Let me show you SBI. It works on any stock, any time frame. Again, I'm telling you, it works on any time frame. You can always do a back testing. Okay. So let me go on to the monthly chart, which I had given long time back. That State Bank of India was in monthly demand zone, and there was a very so many bad news which were flowing in the market, and there was Vijay Malia who took the 9,000 crore amount. So there was this news when the stock started falling down from like 260 level, and if you see, this was the demand zone. Okay, now here if you see, this was the demand zone. Let me take this a bit up, and this is a boring candle, and I'm going to draw it like that. Okay, this is the one. So now if you see, this is a monthly chart. Okay, so obviously it is a very long time frame. So for a portfolio pick, you would have always, taken a trade in case if you were aware of. So okay, I'll show you first here, red, blue, red, red. So it is a supply zone. Okay, so what I'll do is I will click over here, and stop loss would be somewhere around here. So now if you see, it came in the zone, and then it again made a low of 145, 145 from 188. Okay, I guess maybe 1:2. I'm not sure. So the main focus right now is about the demand zone: red, blue, green, 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 green. In fact, four green candles. The more you have green candles, the more it is a stronger demand. Again, it is same for supply zone as well. The more you have supply red candles, the more stronger is your supply zone, right? So if you see, prices came back into the zone. It was entry point at 154 if you see on the right side, and the stop loss was 144. Okay, and then if you see, it almost made a high of, I guess it was somewhere around 380, 374, 375. It never came back into the zone, and now again after 3 to 4 years, again we are onto the same level. Again, it's a very low risk reward ratio, wherein if you see, right now the price is at 150. If it bounce, it should bounce from here. In case if the prices are not bouncing from here, in case if there's a stop loss of let's say 144, then the next level which we are supposed to look for is 113, and that should be very quick, because it's a multi-year support, it's a multi-year strong demand zone. And if it is getting broken at this time, please expect this stock price to come back to this 113 level. That would be a very good entry point to go long. And let's see how it goes. So this was just an example on monthly chart. Again, you can check for any time frame when there was one. I'm not sure, let me check, because there were I had spotted it on Yes Bank also. Okay, if you see on Yes Bank, mm, okay, just a minute. Okay, there was somewhere where I had spot the chart. It's okay. So you can do your back testing. Again, it is the way it is for demand. It should ideally go supply. Ideally, as of now, this demand is not yet broken, but then it is spending a lot of time in this demand. So the more it spends time, the more it gets weaker. But ideally, I'm expecting Yes Bank to touch this supply zone which is somewhere around 39. So if you see on a daily chart, we have red, blue, red, red, right? This is green, blue, green, green. So this was the example which I wanted to let you all guys know that how we can spot demand and supply. If you see here on daily chart of Yes Bank, uh, aggressive entry, since it was a very trending on the downside, so always don't expect that conservative traders will get entry. So now here also, if you see, there was a red, blue, and then red, red. So the entry was somewhere around 53.55, and if you see, it touched this blue candle touched 53.55, and then from there it was almost at middle low of 7 rupee. But again, you are looking for 1:3, and then if you want more, you can always trail your stop loss. So that was it. You can always do backtesting. You will get lot of examples of demand and supply, and you can do live trading also. If you see here, this was the supply zone on Yes Bank. Red, two blue candle, and then red, 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 red. It touched the supply zone, which was at 74. It went down till 28. Again, it touched. Again, it went down. Okay, so it's kind of sell on rise whenever you are checking any of the candles like that. Okay, there is always a chance that your stop loss is also going to hit. There's no 100% guarantee, but then you can always try for any stock also. It works very beautiful. So that's it, friends, from my side. In case if you have any doubts, any queries, you can just, I'm going to upload this video on YouTube. So in case if you have any doubts, you can just put in the comment section, and I would be happy to help you all guys. Thank you so much. Thank you.